Alright guys, today we're going to take a look at balance sheets, and they're really not that complicated. It's a matter of taking assets and making sure they're equal to liabilities and equity. So let's get started. Okay, so if you take a look at the balance sheet here, in fact let me zoom in a little bit. If you ever need to zoom in, just go to View, Zoom. You can zoom in a little bit. Okay, now you've seen this sheet before because we did this income statement, but now we're going to be filling out this balance sheet. I want to remind you most of this information is coming from the given section over here. Okay, so cash and equivalents came from over here, right there. Short-term investments came from right here. Accounts receivable here. You get the point. Alright, so we got our assets and our liabilities and equity on the other side, because when you add the assets up and the liabilities and equities up, they should equal each other. Okay, so let's start with the cash and equivalents and all the assets below it, and these are called current assets. Now current assets means that these are things that we could easily and quickly sell or move around to create cash, to be able to we call it liquid assets, because we can move it around quickly and exchange it for cash if there's an emergency, or if we go bankrupt and we have to sell everything. Those are the things that go first. So yeah, total current assets, pretty easy, equals sum. We're going to add up these guys right here, and we got 234,625. Now you take that plus your non-current assets, so the assets that are not so easy to move around. So this would be like plants and equipment, cars, vehicles and things like that might count. Factory, items, machines, things like that. Things that we just can't just get rid of. Okay, so this is 435. So if we want to add up all of our assets, we would take the current and the not so current, and we would add these up. So this equals this guy plus this guy. So 670,246 is my assets. Now when I'm finished with this right side, these two should be equal. Okay? So let's take a look. We've got my liabilities over here. These are things that we owe. So accounts payable are people or companies that we owe for probably products or inventory or things like that. Notes payable, which is like loans. Okay, so we might owe a note or a loan still on the plant that we're using, or equipment we're using, things like that. And then we got accruals. Okay, and then if we add all these up, that's our current liabilities. Okay, so these are things that are shorter term, usually 5 or less years, is what I was told when I was in school. So we'll add these up. That's 215,416. So that's current liabilities, things we owe right now that'll get paid off soon. Okay, long term, we may have some other things that we need to pay off. In this case, we have some bonds that we owe people for. So we're gonna we raised money by letting people buy these bonds, and we got to pay it off at some point. But we have set that to be a long-term bond, so that's going to take a while. So all we got to do, just like before, we got to add the current, the short term, and the long term together. So equals this plus this. We have $339,509 in liabilities. Okay, so we're almost to 670. So this minus this should equal equity. Okay, so let's take a look at the equity, and we've got preferred stock. So preferred stock is separate from common stock and retained earnings. That's called common equity. So preferred stock stands alone. It's its own type. And so we're going to press equal, and we're going to go over here, and we can see that we have 34 preferred stocks at a value of 1,875. So we multiply these two, the 34 times the 1,875, and that tells me how much money is in my preferred stock account. I also have common stock. We're going to do the same thing here. See how much common stock we have. We have 60, and we're going to multiply that by the value. That's 201,000. Now, common stock and retained earnings are considered common equity, and preferred stock stands alone. So we're going to add these here in a second. You can see I've already started that, but we need to figure out what retained earnings were. Now we could do this a couple ways. We can take a look at the retained earnings over here, 36,000 plus the previous retained earnings that we already had, which was 28,000. We could add those up, but we've already done the work. If we go over here to the statement of stockholders' equity, we look at retained earnings. We've already calculated this. We took last year's retained earnings. We calculated net income and we subtracted out the cash dividends. And this is my new retained earnings. Okay, so this is that final number we need for that space. So I'm going to go back over here to retained earnings, press equal, select this number, and now we've got 65,627 over here, retained earnings. So if you add these two up, you can just press equal and you can add them up, or you can press sum, add these up. It's 266,987. Now, if you take your liabilities plus your two equity accounts, you got your stock, preferred stock, and you got your common equity. So you take liabilities plus preferred stock plus your total common equity, it should equal the same as 670,000. So let's find out. So we got equal liabilities plus preferred stock plus the common equity, and there it is. Balance. That's the way we like to see it. So that's the balance sheet, guys. If you have any questions or if you need to see that a little slower, you can always rewind, or you can just come ask me, email me. I'll be happy to answer questions. We are going to see another video tomorrow where you'll get a chance to answer questions and then do one on your own. But if that's it, then see you next time.